All right, guys, well, let's look at two stocks today, both of which seem to be going in the opposite direction. However, valuation is what tells the story, and honestly, the valuation is going two separate ways as well. But are they both still a buy? Well, as you guys know, that means Wall Street has an opinion on this. So let's see what their opinion is. We'll talk through it, see what I agree with, what I disagree with. There's actually a lot in here. We got private equity, we got stocks, so a lot to get into. But make sure you like the video if you like getting the truth off the hype, because that's exactly what you're going to get today. As you guys know, I own both of these stocks, but let's see exactly what they're saying, because I agree with some, and I strongly disagree with a lot of the other things. And more importantly, these two stocks are kind of doing two separate things right now. So a good discussion here to have about the goods and the bads with what's going on with both these companies.
Alonso Munoz is with us, CIO at Hamilton Capital Partners. What do you think about this market, which right now the VIX is taking a breather? We crossed above 5,700 on the S&P 500. Do you think the bottom was put in mid-April?
Hey, Nicole, it's great to see you. We think so. I mean, the market really sold off. We talked around that time.
I don't know. Who really cares? Not worried about that. Again, our individual stocks may have bottomed then. They may have bottomed before then. They may not bottom for another 6 months. Who knows? It's different for every single stock. Again, if you're on the indexes, this makes sense. If you don't own the indexes, guys, this type talk, who freaking cares whether or not the bottom was in, bottom was out, whatever the case is. It's only good for illustrations and not necessarily good for your overall investing.
And it was very busy. The market was very ugly. The momentum to the downside was really, really strong. So we think that the worst of the news is behind us, ripping off of the Band-Aid, if you will. So we were buyers, as we talked about, obviously, in the past. And we think that now the market is looking forward. Clearly, the economic data has been pretty strong. And so the economy went into this with strong footing. We're looking forward. Obviously, we had a big Fed decision yesterday, no cuts. But Fed Chairman Jay Powell was pretty optimistic about the economy, and we're taking that in full stride as we look forward.
So at this point now, when you said we were buyers, you bought on the dip. What were you buying?
We talked about this, Nicole. We were buying tech. We're mainly tech investors. So we were buying names like Google, Microsoft, Apple, Tesla, and more, Meta. And those have played out pretty nicely since then, at least over the last couple of weeks. And now we're just waiting to see how the data starts to play out over the next couple of weeks. As you know, we get CPI and PPI next week. And that'll be really important as we start to assess what the Fed is going to do later this year in terms of rate cuts. We saw pretty ugly.
So essentially, this is more Wall Street speak for we're going to sit around, try to make guesses and speculate about things instead of just using what the Fed pretty much tells you and kind of moving forward from there. This Fed game over the past couple of years has been really easy because they've pretty much telegraphed every move they were going to make well ahead of time. There was occasionally things that popped up that created more urgency or maybe a little bit of a different stance. But we've been sitting right here on this channel laughing, especially in our group at this sort of talk and this sort of, oh, the Fed needs to do this, oh, the Fed needs to do that, when the reality was outside of the beginning where they completely missed the inflation curve coming. Beyond that, they've done a wonderful job of calming the markets, bringing us in for a nice soft landing after the crazy inflation that we did see, and basically not bending to political whims or anything else of that nature here in the meantime as we continue to move forward. That's more Wall Street stuff, more trader stuff, more of all that sort of thing like that. I'm worried about what's on earnings. I'm not concerned with what the Fed's doing at all. It has zero bearing on, doesn't really have or tell me a whole heck of a lot of what's going on with any stock that I own right now in regards to the Fed. And I don't think they should be lowering rates this quickly, this early right now anyways. There's no reason for it. If anything, you want to have more ammunition in the event inflation kicks back up, maybe some of the tariff talks go badly, whatever the case is, you want to have more, ammo per se to fight that sort of thing, not start unloading your ammo just simply because, well, we might be clear, everything might be good. I like the Fed strategy. For me, it's been very, very prudent so far.
In the bond market, the 30-year auction tailed around 1 p.m. today, which wasn't a great sign, but the equity markets are rallying. Bonds are falling, and there are opportunities in this market for investors and traders to pick at.
So a name like Google, for example, Alphabet Google, sold off, has had some headline-driven risk to it, but it has come back. I mean, 1 month is up 7%, but it's not up.
There you go. Headline-driven risk kind of tells you all you need to know right there. What risk is a headline-driven risk? None. Just means the news has pushed it down. It is essentially what it is. I don't know. Did we see a dip in revenue? No. Did search take a dive like everybody swears up and down that ChatGPT and everything else is eating their lunch? No, it grew by double digits. Like anything about this is laughable. Cool headlines. It's exactly where we make our money, is going, we're going to ignore the headlines and look at what the data says. The data says the exact opposite. Cool. That's where our money's made right there. Been true for the history of the time. I've been in the stock market over 25 plus years, and I won't call it easy because it's definitely not easy, but boy, they sure do miss the boat completely with narratives and headline driven things of that nature.
Some of the others in 1 month. Do you still think this is a valuation opportunity? Maybe something like Google, you buy it here today?
Well, maybe, it looks attractive. We own it for disclosures, and our clients own it. But when you look at this compared to the other hyperscalers and AI names, it does look maybe not cheap, but lower valuation and good entry points. We saw the headline risk yesterday. Apple may be integrating some of that AI into their search solution. But Google's a really great American diversified company. They have strong ad revenue. They posted really, really good earnings late April. So this is a company that we're still excited about. It has some headwinds. It has some regulatory struggles. But we're going to continue to own it, and we're going to buy it and pick at it on weakness, certainly.
And if you haven't picked up on the game, they're looking for quick trades, not day traders. Clearly, some form of swing trading or whatever the case is, but they are definitely looking for names with momentum to try to buy the dip on and then ride that momentum up. I won't say he skirted the valuation question, but you can definitely tell that wasn't his priority. Priority was what's going to make money the fastest, and that's probably not going to be Google in the short term. But we're long-term buy and hold investors there, so very, very different than what he's looking to do.
Would you be looking at, so you do mostly tech. We think about the Magnificent Seven, but there's so much more that comes out of AI and so much when it comes to tech. What other kinds of tech do you like?
Yeah, that's right. Well, look, there's a lot out there. I'll bring up a name that we've been watching, which is Apollo. It trades on the ticker APO. And this is an asset manager, one of the largest private equity companies out there. And we've seen, Nicole, we've talked a little bit about this, the democratization of private assets and alternative assets, and making that available to retail investors and folks like you and I to be able to participate in a field that was traditionally dominated by the large players and the hedge funds and the institutional buyers. So this is
It is still dominated by that. Don't let a lot of those fool you. I don't know how this one's set up specifically, so I'm not talking about this particular fund, but a lot of them you don't actually own the assets, or you own the entity that maybe owns some of the private equity in there. You have to read each agreement, go through all of them. You have to understand exactly what you own, exactly what your rights are, exactly how you're cashed out. A lot of other things of that nature factor into it. And of course, each one is set up completely different. So you've got to read all those sorts of things so that way you understand what type of owner you are, because not all ownership is the same, especially when it comes to private equity. It is much more complex than that. That's one of the reasons why it's not really available to most people, is because of the complexity involved in the first place. So if you're going to buy into one of these funds, again, I've not looked into this one at all, but you have to understand what they do, how you're paid out, what the ownership structure is, everything else of that nature before you buy into it, so that way you understand the game that you're playing per se. Just simply because it's the latest hot thing out there does not make it a good thing for you and the right thing for you as an investor.
Name for investors to participate in that gold rush, if you will, to alternative assets. And it's very clear, obviously being in the financial space, but watching the industry evolve, folks are interested about alternative assets, not just in their retail portfolios or brokerage portfolios, but also in their 401ks and other avenues.
Correct. And typically the best alternative asset opportunities are fully subscribed, oversubscribed, and have plenty of money. They don't need to raise it from us through an offering like this. So also keep that in mind as well. Not saying there's some good ones that come through. Absolutely there is. But the vast majority of those great private equity deals, the legendary ones that kind of happen and come and go, generally speaking, they're oversubscribed, very, very limited access. Even if you have money, a lot of those are incredibly hard to get access to. You basically got to know somebody in that particular fund in order to get in order to get access to it. So very, very different ball game, one that I would definitely study before owning an asset like that, just to make sure you understand what's going on. It is not the same as owning a public company and just looking at regular financials and things of that nature. It's very, very different.
This is one of the top tier private equity alternative asset managers, and it's a name that we're going to continue to watch going forward.
Right. Now, you mentioned Apollo as a name that you like, APO. That's one you like. Are there any others that you care to share today for ticker symbols?
We do. Look, I know on the program a little bit earlier, you talked about Tesla. We like Tesla a lot. We think that they're a catalyst coming up this summer and later this year that could draw.
Yeah. Clearly, he's a Tesla guy. You can just look in the background there, see the Cybertruck with the, the Optimus spots. Knew that was coming regardless, but let's see what he says.
The stock higher. Things like the robo taxi and the cyber cab coming to market. Optimus, which is their humanoid-like robot, and the applicability maybe in the manufacturing sector and others. So this is a name that's sold off significantly, as we've talked about in the past. Since December, it's taken a beating. It's come back. It's had a nice little rally, but we're watching it very closely. Great company. They just moved and rolled out their new Model Y, so we're going to watch it. We've been picking at it too, so we think it's a great name. We're going to continue to own it.
Yeah, they're looking to ride the momentum there. But you notice that the catalysts, those aren't going to be actual catalysts to the bottom line. They're definitely going to be newsworthy, hype-worthy, of course. But in terms of adding anything to the bottom line, we've talked about it repeatedly. It's not going to do it anytime soon. Optimus isn't doing it really anytime soon. Exciting? Sure, absolutely. I'm ready to see them get out there, see the goods and the bads. But we're talking several years here till I see anything meaningful on the bottom line in regards to robotaxi, which of course means it's opening itself up for the traders getting in, piling into the trade. And then obviously once kind of the hype dies down, what do we have left? Unfortunately, unless the fundamentals pick up, which I hope that they do, understand that I like the Model Y refresh. We'll see exactly how it sells. We'll see exactly how everything else plays out with this lower cost model, everything else that's going down. But there's a lot of unknowns there and not a lot of things tangible I can point to. Yeah, that's definitely going to bring that valuation more in line or make it a much better play than what it's doing right now, which basically right now, momentum's going in the right direction there. So of course we're making money on it, but we'll see. I suspect like a lot of you guys, that's going to continue to happen there until the robotaxi launch. And we kind of see where that goes from there. So interesting times, interesting to see where a lot of these guys think names are going.
Right, understood. It's really good to see you. How high do you think Tesla can go? I mean, it's at 288 today. Maybe this year or next year, do you have a price target?
Well, I'll leave that to the analysts that set price targets, but hopefully it goes way up, and that'd be great for our shareholders and our clients. So we're going to watch it super closely.
Right, understood. All right. Alonso Munoz, thank you so much of Hamilton Capital.
All right, so there you go right there. He didn't want to give a price target. Don't blame him. Those price targets are useless. We've talked about that before. Everybody's price target is useless. All they're doing is chasing momentum. In most cases, they're being told what to put and particular prices because that's what the firm's trade has on. Again, all this is verifiable. You can look it all up for yourself. If you don't believe me, go right on ahead. That's why I put zero weight in analyst price targets. They simply chase momentum. All of them, the bullish ones, the bearish ones, they all play the same exact game. They're bullish, 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 bullish. It doesn't matter what valuations are. It doesn't matter what anything happens. They just keep pushing the target up higher. And then whenever it crashes down, which all stocks eventually do, if they get too overheated, they just lower the price target, lower the price target, lower the price target, lower the price target all the way down, and then all the way back up, rinse and repeat. So obviously the guys that are bearish, it'll always be below the price. The guys that are bullish, their price target will always be above where the price is right now. And therefore, people think they're geniuses and other things of that nature as they move in opposite directions. And it's all silliness when you understand that game. So for me, the two big stocks we talked about there, Google to me, love the valuation, love the performance of the company underneath, which is most important. So to me, that's obviously where my money's going. Tesla, unfortunately, right now, it's in the exact opposite situation. Valuation is extremely rich. And more importantly, you aren't getting performance underneath. There's no denying that. Again, Google's performance has been wonderful, growing at every level, accelerating growth, and you're just not seeing that with Tesla right now for more than a year and a half now. And so obviously, do I think that picks up again? Of course. But again, when you have that situation of not good fundamentals and the price being extremely rich, it's not a situation where I want to put money towards that asset. I'd much rather buy the opposite. Again, always remember, you're going to look dumb in the short term to make a lot of money over the long run. That is how investing works. Unless you magically time the bottom, you're not going to. Therefore, you're going to look dumb in that short term. But over the long run, that's how you make a lot of money in the market. And if you're serious about your investing and you made it this long in the video, I might have left something special for those of you guys down there in the pinned comment who want to join my group. Check it out. See everything that's involved there, guys. You get free coaching, free courses. Put videos in there 2, 3, 4 times a week. So much involved. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.